Okay, hi guys, Jackson here. So on Friday, the market plunged. The market plunged because Donald Trump say 100% tariff or whatsoever. To me, I don't really give a shit lah. Okay, basically the market plunged 3% on one day, and I think if you see the news or on Reddit or on Twitter, a lot of people's account got liquidated. So they basically lost a lot of money or all of their money or all of their account on Friday. Now let's just take a look at the chart first. I think you guys must be very familiar with this trend line that I have drawn and I have shown you over September as well as October. We can see that whenever the trend line touches here, and touches here, what happens? A pullback occurs. A pullback occurs. A pullback occurs. Down here also, down here got one short small pullback. And then now that it is very near to the trend line, the upper trend line, the upper channel, as well as the RSI showing that it is overbought. It is very difficult to do swing longs because there is not much room left on top. Okay, of course, people can argue that, hey, I can do a swing long here, and then I can put my stop loss maybe at the recent swing low. But then you won't hit your target very much lah. Maybe it goes up a little bit. Maybe you get a 1:1, and then you have to close off the position in case the market pulls back. So usually in September and August, they are very difficult months to trade, but this year's August and September is relatively smooth flowing, which means that the pullback will come sooner or later lah. The market plunge don't need a reason one. It just can do it because it is overbought, because there is no more buyers and whatnot. Okay, so what do we look out for next? Also, sorry, I was also showing you guys before. Now this is a monthly chart. So every candle is 1 month. So the last time you see we have got 1, 2, 3, 4, 5 consecutive green months. The last time that happened, 1, 2, 3, 4, 5. Back in November 2023, 1, 2, 3, 4, 5, and then we have a red month. This one we have 1, 2, 3, 4, 5, and then we have a red month as well. This is back in May 2024. Then this one we also have 1, 2, 3, 4, 5, and in March 2023, then we have a red month, and a red month. And of course, this one, 1, 2, 3, 4, 5, 6, 7. This is back in 2021. 2021 was the easiest time to trade lah. You buy anything also make money one. Okay, so knowing all these statistics about having 5 consecutive months, usually the next month will be red. That just tells us when we need to be more cautious. Okay, switching to the daily chart first. Now, this is the MA50, 50-day moving average. So if you go to your SMA, your simple moving average, your input should be 50 and your time frame should be 1 day, and wait for time frame close. Okay, so you can see from here that this is the first time that FPY goes near to the MA50, and then it gapping up a little bit today lah. So anybody who wants to buy their investment can buy their first chunk around MA50. So let's say you have X number of X dollars you want. Please do not one shot go all in. Please split it into 3 or 4 chunks so that you have bullets to buy if the market drops further. Will this turn into a bear market? I don't think so lah, not for the rest of the year lah. Okay, so the first entry for BOO will be somewhere around 651 for SPY. And if you look at BOO, the first entry will probably be about 599, 598 thereabouts. Okay. Now we delete this one first. Okay, so where are your next support levels? Okay, where are your next support levels? The closest one I would think is somewhere around here, 633, thereabout, because this is where the previous swing low is before it moves up lah. Okay, then if you use the FIBO levels, if we were to do from here to here up, we can see that it went close to the 0.5 and then it bouncing off for now. This is for now lah. Usually what happens when it after 5 months it never reached the MA50, right? Okay, so when was the last time this happened? Okay, so this is, sorry, I closed this one off first. So this is the first time it broke up above MA50 and then it took 162 days before it reached the MA50 to retest the MA50. So can you see that from here, right? Usually what happens is that after a breakout of the MA50, it comes back to retest in about 50 days. Okay, retest in 50 days, and then after that it bounce off again, it comes back to retest the MA50 at 48 days. When this happens, it broke out of the MA50 and then it comes back to retest in about 19 days. When this one breaks above the MA50, it comes back to retest at about 79 days. So the last time it didn't retest for very long was here lah. From here breaks out, just assuming this is the retest, it came back to retest at 158 days. So this is already very, very close to the previous time it happened. Now, so we just look at this portion here. What happens after when it retests? When it retests, it just went down, up, down, up, down, up. It just went sideways for about, I think about 2 weeks. Yeah, about 3 weeks. About 3 weeks before it breaks above the MA50, and then after that it continued to rally lah. Okay, so we need to see what the market does in the next couple of weeks. You sit out for the next couple of weeks, you don't make money, it's okay. You also don't lose money. That is perfectly fine. What I want to show you guys is this portion here. Okay, so this is back in 2023 when the market had quite a big rally, okay, and it had a corrective pattern. It had a correction. Okay, now market correction means 10% pullback, 10% drop from top. See, so this is the top and this is the bottom. How much did it drop? 10.88%. Can you also see that there is a wave pattern? Okay, where's the wave pattern now? There is a wave pattern. This is your 0, 1, 2, 3, 4, and 5. So this is your wave pattern. And this wave pattern, how long did it take to form? From the top to the bottom, it took 92 days, approximately 3 months, which is a very long and painful process. But if it's a very long and painful process, after a correction, usually you will get a very nice rally, something like that lah. Okay, so how can we tell that this is going to happen? Okay, or this is going to happen like a sharp drop and a sharp rebound, or a sharp drop and a sharp rebound, or like this one, a sharp drop and a sharp rebound. What I want you all to take note is the candles. So the candles you see, one day red, next day a bit green, next day a bit red, then you have green, then green, then you red, then you red. Then it's like a very, very slow process, a very slow and painful process. You will feel that the market is not going anywhere for now. And as compared to this kind, this one was back in February when Donald Trump was playing the tariff. I impose you, I don't friend you, you text me, I text you, this kind of thing. Then you see that it is red, 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 one green day, red, red, then a green day, then red. But then you can see that it is dropping very quickly. Okay, so the faster the market drop, the faster the market rebound. If it is those slow type, then it will be a very long game, a very long waiting game. Okay, so now how do we also know if it is a reversal or a retracement? Okay, I just type here. A retracement equals to will drop more. A reversal is reversing to the upside. Okay, so very simple. We use a feeble retracement. Assuming this is the top, okay, let's say I just replay this. Okay, replay this until here first. Okay, now assuming this is the top and we pull it down, because this is the bottom, and then we just extend it towards the right side of the curve or of the chart. Then we click forward, then we see this one just going up. Okay, now what I want to see for a reversal is that I want to make sure that the candles are holding above for at least 1 week. I'm on a daily chart, by the way. So this is 1 candle, 2 candle, 3 candle, 4 candle. And you see that the candle, the 2, 3, and 4 candle, they are red. It's not very convincing that it is a reversal yet. Okay, because it's not more than 5 days. It's only 4 days and it's like red. Then what happened? It continues to drop further. Then, so it continued to drop further. Okay, then we do the same. We use the feed retracement, we pull here. Okay, assuming this is only what you can see, it's 1 day above 618. Then after that, the next day just plunge. The next day it goes lower. So what we do is we pull this one. We follow the candle one day, pull, one day, pull, one day, pull, one day, pull, one day. Then after that we pull until here. Then after that we get a few green candles. We get a few green candles. We see, the 0.5. The market cannot even clear the 0.5. This is a sign that it is a retracement and not a reversal. There is more downsides to come. So after this, what do we do? Because this is the next wave already, the next wave, we just take from here, the top of here, and all the way to the bottom of this candle. Okay, so you one day, pull, one day, pull, one day, pull. Okay, then it drop. Now, we have a clearance here, a breakout of the 0.618. And then after that, we have 1, 2, 3, 4, 5. And you can see that it is holding very nicely above the 0.618 and already close to the 1 level. So that is where you know, okay, we might have potentially bottom at the, we potentially reach the bottom. Also, we know that a correction is 10%. So from the top to the bottom here, this is about 11%. Just now I was saying 10.88 or something. Okay. Then the other one that I want to point out also is here. Okay, so now when this is the daily chart. You see this part here. Okay, see this part here. And if we were to just draw a straight line, can you see that this was the previous all-time high before the correction happened, before this correction happens? So when it breaks out, it pull back all the way to the previous all-time high. It retests the previous all-time high. Now, where is the next all-time high? It is not this one. This one is not the all-time high. You cannot retest this thing because it doesn't go like that and come down. No. So the previous the next all-time high is here, which is at 611. Okay, which is at 611. Assuming from the top here to 611, this is 9.29%, which is very close to the 10% correction. Okay, and the swing low that I highlighted just now is this swing low. Assuming it pulls back to this swing low, this is about 6%. Number pullback is a 5%. Correction is 10%. So if it pulls back to 633, that is a pullback of 5%. Okay, still not too bad because we already got pullback. Then maybe the market will come here, chop around, then after that continue on its way higher Okay, or it can just chop around, drop to this previous all-time high, and then after that make its way up again. When we pull the MA 100, can you see that the MA 100 is near to this previous swing low of 633 thereabout? So the MA 100, by the time it drops over there, maybe the MA 100 goes here, then it will serve as a support for the market to bounce off as well. Okay, the MA 200 will be a bit far Then if let's say the market has a correction, then the MA 200 will probably catch up until here, to which bouncing off here is also okay. which is why I say if you want to buy any investment, look at the SPY first, then decide whether you want to buy it at a discount or not. There is no point in FOMO chasing when the market is going up like that. Okay, always buy your investment on a red day. Now, immediate thing to look out for, going back to the hourly chart, okay, immediate thing to look out for is this. Because it plunge, right? Just take the top, pull all the way to the bottom of the candle, and then extend. We see that our immediate levels of 0.618 is here and the 0.5 is here. I do not expect the market to just like that plunge. No, I don't think so. I don't think that's what it will do. It will just probably go a bit sideways. Alright, before it makes, or maybe go up a little bit to the 0.5, reject, and then after that just come back down. If it rejects the 0.5, then probably we will have another wave down. Okay, one thing to look out for is the VIX. So how do we know whether the market has bottomed or not? We take sama, we take the Fibo retracement, go bottom, pull up, and then after that we pull the VIX, the retracement sideways. Okay, so let's just say this is, for the VIX, I am looking at the 0.5 level. 2 days below the 0.5 level, because the VIX is a volatility index. It doesn't so much follow the rule of the normal calculation lah. But anyway, just take 0.5, 2 days. I want it 2 days below the 0.5. Let's just say this area here. So this one spikes, and then after that, okay, so we have here first, then after that the next day it spikes, right? You don't gong, just leave it like that. Pull it to the swing high, and extend. So back in April, this is where the 7th of April, this is the top where the VIX reached lah. Okay, and then after that we drop, it dropped 2 days below the 0.5. See 11th of April. Let's go to SPY and see 11th of April. Where is 11th of April? 11th of April is here. Okay, so 11th of April is here. So can we say that the market has bottomed? Yeah, the market has bottomed because it never make a new low. But of course, if you know how to read the chart, then you will have, down here is already overbought lah. Then you have probably went in a lot of swing long or buy investment somewhere here lah. Okay, but anyway, so the market didn't make a new low, and then after that it just continued higher and higher. So if you don't believe me, you can do your own back testing to watch the VIX, how it moves and how the market moves. So level, feed retracement from the top here, pull to the bottom here, and then just extend it sideways. Watch what the market does at the 0.5. Okay, this pullback is very much needed in order for the market to move higher lah. And immediate level, watch 633 thereabout. Okay, next level, watch the previous all-time high, which is at about 610 thereabout. How long will this sell-off last or the pullback last? I really don't know. We will just watch the chart and see what it does. Okay, thank you for listening.